Thanks for joining us once again. Today we focus on how is Tesla going to do against Waymo and company when it comes to the Tesla Robotaxi. There's a sidebar part of this, which is why are so many hedge funds being wiped out by Tesla's ups and downs of the price? And I think you'll find the information useful as we head into a new round of exciting Tesla stories that's going to affect the stock price. This is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time, welcome. If you're a repeat visitor, welcome back. We also want to thank our Patreon supporters. If you enjoy the show or like some better ideas on investing and trading, please join us on Patreon. So there's a question that's been hanging over Tesla for the last 15 years. And the question is, how is it that there are all these people that are paid a lot of money, that have a lot of experience, for example, Bob Lutz, 30 years in the industry, 40 years in the industry, and then you're looking at analysts who have multiple years of analyzing that they've been doing, but they've all turned out to be wrong. That's you, Gordon Johnson. So I think I have an answer to that, and therefore I have an answer to what's going to happen as Tesla enters a battle with Waymo. This show, as you know, is about 6 minutes long today for the what's going on portion, and then our anticipated between 6.5 minutes and 12 minutes. So the main thing I was trying to figure out is if you look at Jim Chanos, who had an $8 billion fund, and then after tangling with Tesla, he managed to go shrivel down to $200 million, at which point he shut down his fund, his hedge fund in New York City. And the question was, well, how can somebody with that much experience, that much money, get blown out by Elon and Tesla? And I think I have the answer for you. So the problem with Tesla that a lot of people seem to have, and this includes me, is that what if Elon changes his mind and gets serious in terms of his process? All of a sudden, the basis of your analysis as to why Tesla might lose in a situation is suddenly blown up by the new things that he's doing. I could go through 50 examples, and we may have to do another show to cover this, but a great example of what I mean just happened 6 weeks ago. So there was a mention of the fact that both revenue and profit for Tesla, revenue or profit down 71%, revenue down 13%. There was a whole bunch of, this is the sign we've been waiting for that Elon and company are going out of business based on what he's been doing with Doge. Well, there was a little bit of a problem that popped up with that, which is this is the first time in 15 years that I've been observant that Tesla has completely shut down all of its factories and spent 3 weeks retooling for a new product. Usually what Tesla does is on a quarterly basis, there's about a 25% change in all the vehicles that they produce and sell. They continuously identify issues or opportunities to enhance the ownership experience, and then those changes are made on a real-time basis. In the cases of changes made to the Model Y in the last round, the changes were so significant that they actually had to shut down, retool the factory for those changes, and then start production again. So this is an example of why hedge funds are getting slaughtered. If your job as a hedge fund is to say, take the raw data in terms of the numbers, and you have some numbers to work with, and you can therefore say, hey, this is what earnings will look like this year, this is what earnings look like next year, etc. And now you can extrapolate that to a stock price. Well, what happens when, for example, in the case of Norway, Tesla went from let's say 900 vehicles sold in the same period last year to 2,500 vehicles sold. The spike in new sales associated with the update of the Model Y pretty much suggests that it opens the question of, well, what if all of the locations for Tesla go from numbers being down while the facility was shut down in Germany to produce to numbers being way higher than expected? This means that there's a whole bunch of people that now had a model in mind, and that completely doesn't work anymore because Elon changed his mind and is doing some great work in terms of how the company is managing itself. So I'm bringing that up today as we enter a discussion about, well, what's going to happen with Waymo and the Tesla Robotaxi. So it was my assessment that the Robotaxi might be a disaster, and it was all based on the construct of how Elon was choosing to operate, which is to simply put 8 cameras on the vehicle and let it out in the wild and hope for the best. The outcome of this has been that there have been a number of lawsuits when accidents occurred, and those lawsuits tended to be settled by Tesla. And so my assessment of how the new Robotaxi was going to do was really based on the data that we had on all the accidents occurring. Guess what? Elon decided to change his mind and get serious. And when Elon is serious and he has technological advantages and cost advantages, you tend to get outcomes that are attractive and very, very powerful. So in this case, as you know, they're going to a geofencing area. They're going to have full-time staff on board to observe the vehicles and make sure that everything is modified. So an expectation I have of what will occur is there'll definitely be obviously a 1.0 version of this, but guess what? There's going to be a 2.0, there's going to be a 3.0, there's going to be a 4.0. And expect that every one of those changes is going to result in a dramatic difference in terms of what you see outcome-wise. So even if we get a few bumps in the road on the front end, once Tesla is committed / Elon is committed to this, I think you'll see that not only will Tesla deliver as good, if not better, than Waymo's been delivering to their customers, but Elon is not averse to introducing new technology, including LiDAR and radar, that might address any shortcomings that he might find on the front end of the introduction of this vehicle. So I expect it to be a smooth rollout based on the number of days that they've had these vehicles on the road and modifications being made based on what they found. All I've got to say is that, yes, you could get the stock slammed initially once these vehicles come out, but if it works like I think it's going to work, which is it's going to come out with like a B grade and then give it a month, and that B will go to an A, and then that A will become industry norms. So there are basically 5 reasons why I believe Waymo's toast. Number 1, Waymo, their vehicle cost is $100,000 per vehicle. That includes all the LiDAR, radar technology, including the Jaguars that they're running in this situation and the updates to the maps and so forth that they have to regularly go to. Number 2, Tesla is already producing the cars, so when you add the technology cost to the vehicle cost, we're definitely at under $50,000 per Tesla Robotaxi. But I wouldn't be surprised if our Model Ys, because Tesla's cost is in the $35,000 to $40,000 a copy zone, so their net cost is going to be extremely low. And this lends itself to what next might happen, which is idea number 3. If your costs are 50% of competitors, you now have price flexibility, and that flexibility includes Tesla will have the opportunity to price their Robotaxi trips at the cost of Waymo. If that's the case, then yes, Waymo can hang in there, maybe they can cut price a little bit, but the challenge is that Tesla can acquire the technology in larger blocks for lower cost. They already have a car that they can offer to the service at a lower cost, if not even having current owners let the company use their vehicles. So now you have a paid for vehicle where you're splitting revenue with your customers. So my assessment of this whole thing is that yes, there was valid and is valid skepticism about where Tesla is and where it might go. But the challenge is that, particularly when it comes to cost of goods sold, Tesla has a clear advantage. And as Jay-Z once said, I got 99 problems and a blank ain't one. Tesla has 99 problems, but superior technology to competitors ain't one. So as a result, what I believe is going to occur here is that B-ish grade, maybe a C+ that Tesla gets initially when it arrives on the 12th of June, is going to cause some concern about whether it will be a dominant service. But if Tesla/Elon is serious, as they've shown in the structure of the vehicle that deviates from his previous process with FSD, I just think it's going to be a slaughter. And if he truly gets serious, I think he'll come in 10% under Waymo and jeopardizes the future of Waymo because they just can't compete when it comes to cost. So perhaps, somebody like like their partner in Jaguar or one of the auto companies could partner with them to try to get their cost of goods sold down. But in general, Tesla just holds a nice competitive advantage. So all the hedge funds and everybody else who said, hey, Tesla's doing bad, they're going to do worse, stock's going to go down, there was data to support that. Well, the problem is, what happens when that data changes, as in what we're seeing right now, with Elon and company deciding to get serious, adding all the technology that allows them to compete with other companies, including, monitoring where the vehicles are. I just think this is going to be a colossal nightmare for competitors and will justify a 400+ stock price for Tesla in the process. The only fly in the ointment I see is that the 1.0 version of anything from Tesla tends to be decent, but not great. It's when you get to the 2.0, 3.0, 4.0 that you get to see the mastery of the technology and people that are behind Tesla's technology. So don't get too excited if the initial runs aren't that exciting, because what you'll see coming down the road will blow people's mind. And once those people's minds are blown, that's where the stock price is going to be going up. This reminds me of a last phrase. One of the favorite quotes from Warren Buffett is he likes to deal with people that like to get rich slowly rather than those that are trying to get rich quickly. And if you approach Tesla's Robotaxi solution as a slow wealth plan, I think you'll make a great deal of money in the process. This ends our formal discussion of Robotaxi and what I'm expecting to happen as of the 12th when the vehicle is introduced. We actually look forward to your comments and questions on this and really appreciate it if you would like and subscribe. Today is unusual in our health tips. I'm going to include some video of something that's called mint. So we're in the spring season when I can pick up mint from behind me. You can see those rocks. Well, it turns out that I will pick those mints, steep them in a pot for 5 minutes, and it's the best tea ever. And it's essentially free because the mint grows as a weed. And I decided just to include a little video of this today. Don't forget your 25 legless a day, as well as a 20-minute walk. And once again, we want to thank you for joining us. This is Greg for Teslafaninsight. Tschüss, avoir le hitrot. Namaste. Arrivederci. And in Jamaica, we say, enough respect, walk good man. Good luck, and we look forward to seeing what your responses are now and into the future as the robotaxi becomes rather ubiquitous. Have a great day. Bye for now, and thank you for joining us.